So good morning once again. We are on a Saturday morning. This is our NexxPro doubt clearing session. 14th of Feb is Valentine's Day. So very happy Valentine's Day for everyone. And as I was saying, if it's about love and compassion, why save it for just one single day? It can be for anyone. It can be for anything. So might as well exercise it all the days of the year, right? So I also did share a small little thought on the charts and the market yesterday. I do not know how many of you will resonate with me that after a certain span of time, you will tend to. Love is a very, very um, um, cliche word to express the relationship that one will develop with his or her charts. You like them, you love them, no matter it hurts, it pays. It's just like any of your human partners, professional partners, personal partners. It comes with its um, goods and bads, and same with I think charts. Nevertheless, um, today's discussion I will be keeping it a little short. I will not be going to RRG charts. We'll be keeping it completely on the price charts. Um, so let's begin. Nifty, as we can see, weekly on my left hand side, daily on the center, and 125 on the right hand side. First things first is the weekly chart has finally improved even after last 2 days correction, and we have a fresh nascent state of flow on the positive. This is coming completely purely solely based on the last 2 hike-in behavior. The last 2 hike-in behavior is pretty decent. We had a huge turnaround thanks to the US trade deal, US India trade deal. It was a gap up, slow down, follow through move, and all of a sudden a sharp corrective. Primarily the IT disruptive behavior thanks to AI and all those. That's the theme of the hour nowadays, and that's pulling the market down and causing some doubts. So the weekly has just improved. It's a good looking icon. We are completely price based traders. We analyze price and nothing else. So the weekly has improved, which means from the daily, I can look for these, and these short term corrections are nothing but maybe in the future opportunities to go long, only if the lower time frame reverses. So straight away from the weekly and the daily, when we come to the third time frame, it can be 75 for you, it can be 125 for you. Any kind of a reversal going forward next week, if and only if it comes, will give you an opportunity. Yes, it will give you an opportunity. Will that opportunity give you returns or the opportunity will backfire? That only time will tell us. But that's how these things have played out. Of course, when we come down to the lower time frame, like the daily and further down to the 125, things do not look good. They should not, because they're going through a short-term corrective phase. My only lookout, they have multiple lookouts, but the obvious lookout, probably only was not the right word, obvious lookout will be the erstwhile support, the erstwhile resistance zone, which did manage to give a decent amount of resistance to the Nifty in the recent past, out of which we got a very sharp sell-off. This was the budget STT, not so good sell-off. And the next day, a huge, then it comes down and finds close to that zone and some support, and then back again. So at the current juncture where we stand, this is the most important zone, level, price. And so the discussion that I had just earlier, that if and only if the market turns around, this is the area from where it has the possibility of turning around. It does not mean that if it comes down further, it cannot turn around. Price can do anything from anywhere. But this is a sweet spot. This is a good spot. If you turn around from here, I will be happy. I will be convinced. And I would like to go for some long trades. However, if you break down, then things will go for a deeper correction. My weekly charts can get distorted, etc., etc. So view on the market. selective, cautious, careful, long approach. In fact, the view on the market will be on both sides. If you are in the short side of the market, you'll get short trades also. But keeping an eye on the Nifty, it's as of now bullish. Small and mid caps, both of them give a pretty good move. The negative state of flow that we've been experiencing on the small cap over the last few weeks, it has gone neutral and it has given us a green positive Heiken. It's a good looking Heiken. The state of flow has not improved, primarily because the way we calculate our state of flow, we take the at least two candles, two Heiken ashes. Small cap on the daily time frame is going through a corrective phase, just like the Nifty, just like the 125-minute time frame. So it's better to stay away. I need to take this red flag off small cap because with this good-looking Heiken on the weekly, I cannot keep a bearish view. Midcap did fairly better, and that's why you can see that the midcap has given us a state of flow, which is positive. Same story, just like the Nifty, but it has its congestion over here, and then the polarity resistance is down here. So same view, just like the Nifty. So midcap still looks better than the small cap. Before I go to the sectors, quick look at the USD INR, which is at 90.5, and it's more or less consolidating, more or less in this area. After a sharp fall of the dollar or appreciation from the rupee, it has created a range-bound price action. These kind of range-bound price action can generally lead to continuation, which can be a good news. So going forward, if the Nifty reverses next week, we may see a break below 90.40 going forward. Or else if it bounces up and goes above 90.80, yeah, then Nifty probably will go into a further deeper corrective phase. Now that I have scrolled down on this watch list, might as well quickly take a look at gold and silver. Gold is turning around. The first thing that I'll tell you is the beautiful trends that you have experienced in commodities, that's going to go away now. That's number one. That's pretty certain. Weekly state of flow is neutral. The daily state of flow, you can check very clearly. None of them are holding. When it falls for 2 bars, when it goes up for 2-3 bars, falls again for 2 bars. So that's going to be the flavor. It's going to be choppy. It's going to be volatile, which means that if you're a trader in the commodity segment, if you trade, make your trades short-lived. Quick hit and run trades is what I would suggest in gold if you're a trader. My general consensus is you should always have a long-term exposure on the gold market with let's say 9 to 12% of your portfolio over a long span of time. That's fine. So I'm not much into commodity trading from an Indian exchange point of view. And so I would suggest that if you're a trader, keep them short term. Same goes with silver. Now let's come to the sectors. And the sectors, because today our session is little limited to just 60 minutes and we'll not be doing our full-blown 90-minute session. That's why I'm not going into the RRG charts. What we will do is we will focus on the flags. Okay. Based on last Saturday's discussion, we gave some green flags, red flags, and some neutral. So we'll start with the green flags, the sectors which we had marked bullish based on our last week's reading. Starting off with metal, still a very good looking weekly chart. Short-term correction on the daily. We might get a reversal on the 125 or 75. So this green flag stays. There's not much to actually look out here. It looks fine. Public sector enterprise was the other one. This can be encouraging. This can be encouraging because this is also a positive state of flow, but this has recently given us a breakout. And after the breakout, it's throwing back. When it throws back, it generally finds support at previous highs, and then there is a chance of a revival reversal. And so public sector enterprise offers opportunities for long traders if and only if you get a reversal. Please understand that I've been repeating if and only if you get a reversal. So public sector enterprise, unlike metal, which is stretched, public sector enterprise, CNX PAC has just given us a fresh breakout. So I would suggest look at PAC top 5, top 10 stocks first. The third sector, which we had marked positive last week, was the defense. Not a great state of flow because neither of these two bars, you see, it has any strong bullish hike in. It has shadows on both the sides, which tells me this is bullish volatile. Metal is bullish steady, PAC is bullish steady, but this is much more volatile and it shows. Can you see the daily chart and the oscillation it has gone? Nevertheless, bullish, and last 2 days it has done relatively better. The daily chart is also bullish. Rather than trading breakouts in this kind of a situation wherein you have resistances here, why don't I take the opportunity and quickly draw this and keep it drawn on the weekly chart? I'll double click this, I'll go to visibility and I'll take out days. I just wanted to stay there on the weekly because on the weekly, this range has kept the index down for a pretty long span of time. Time and again, it has reacted from there. We need this breakout for some serious long-term appreciation, isn't it? So no need to chase. I would suggest wait for it to come down and then look for reversal. Unless you're a short-term trader, you can look for daily breakouts if you want to trade. But all the three sectors which we had marked green last week stays green. We maintain a bullish bias. Out of these three, the CNX PAC stands out better. You will agree with me because of the nature of the fresh breakout. Now let's go to the neutral, Bank Nifty. Bank Nifty, we gave it neutral because last week it just went up like crazy, all-time high. It was all over the place, huge range expansion. We did not have a state of flow, and our narrative was, listen, let's wait for it to consolidate and give us a state of flow. There's no rush. There was a big fall, budget. There was a big gap up, the US deal. So let's slow down. It's kind of slowed down. The weekly chart is now giving us an early sign of state of flow on the positive side. The daily chart has come off, and this has also given us a kind of a breakout, though it was not a very clean like the PAC breakout. It has given us a breakout, throwback, a little bit further upside, again a throwback. So just like Nifty, this is a sweet spot from where the Bank Nifty can also reverse. It's not that it will reverse. It can. If it wants, it can fall all the way down here and reverse. It can do anything. But why not here? If you do it from here, technically, the chart reading will be very clean. That's what I'm trying to say. So Bank Nifty, should we go green? I think we should, because it's an index which is at an all-time high last week. It's an index where the state of flow has turned green on the weekly. It is probably can give us some short-term opportunities. It's the most important sector to the market. So state of flow from neutral goes green for the Bank Nifty. And so straight away, I will go to private banks. Private banks, where are you? I can see PSU Banks, private banks. Nifty Private Bank, I had also kept neutral. And this also changes based on the same logic. So I'm going to mark it green here also. PSU Banks was clearly an outperformer for a significant span of time. But off late, it had gone very, very volatile. From a steady uptrend, it had gone to very volatile uptrend. You don't want to trade volatile uptrends. Steady uptrends are better. So that's why we stayed neutral. And last week, it has improved, but the neutrality stays. From the red state of flow, it has gone to a neutral state of flow. And so we will keep it neutral. We will keep it neutral. So over here, both of us have to keep one thing in mind, that is this the phase or stage where we see the shift or a short-term shift from the PSU bank to the private banks? Does the PSU bank seems to be more stretched, and so the private banks will probably enjoy a better momentum move going forward? The charts, the positioning of the price and the charts suggest there is a possibility. Only if the Bank Nifty and the private banks reverse, and I have a flush out kind of a behavior on my daily chart stop over here, my readings are telling me there is a possibility of the private banks to bounce back. There is a possibility of the PSU banks to come down. And so overall, I think we will see whether it plays out, this narrative plays out in the next couple of weeks or not. So I would stay neutral on the PSU bank. We generally discuss CNX Finance also. Finance has done much better. Finance now, state of flow has turned green. Daily is just cooling off a little bit, nothing much. My 125-minute time frame has cooled off, so this also goes green. This is not bad because banks, private banks, finance enjoys a lot of weightage. We decided to stay away, but now we are going bullish on them. Fingers crossed, all will depend if the market kind of decides this is it from a short-term point of view and reverses or not. Neutral, others were auto. Now, auto did very good. We could not get any state of flow really because of the way it was coming down. State of flow was negative. The move was exceptional and strong. Weekly charts, I would still suggest with the neutral state of flow and the positive Heiken, if the daily charts come off, it can give us short-term opportunities. So it's very selectively bullish. You need to go very selectively bullish. I would have loved to see a green state of flow, but because the Heiken is such, I am turning it green just to see whether it follows through or not. Neutral state of flow last week was energy. The state of flow on the weekly has turned green. You can see that very clearly. Daily charts are coming off. Same story. Please understand one thing. Next week is going to be, I think, very interesting and important because this logic of strong charts coming down, will they bounce back? If they bounces back, it's good for the Nifty, or else this positivity on the weekly will go away. So it's kind of a situation going forward next week and maybe another week where it's going to be make or break for many sectors, which means make or break for many, for the Nifty also and the market also. Neutral last week was capital market, and capital market had a big move, and I will stay still over here. Also, I have a very good looking Heiken. Over here, it is also cooling off. So if I've gone green on auto, I might as well go green on capital market also because it falls in the same category. There's no other state flow neutral. PSU Bank, we have decided. Now let's go to the green, the reds. I'm sorry. The reds will begin with IT. And yeah, not so good. I would suggest stay away unless you're a contrarian investor and you really want to take a chance on this. Let it flow. It's reacting hard to all the AI related disruptive news. One can talk about this head and shoulder. You can calculate the vertical height and subtract and figure out something for yourself, which will take you back to these lows. These kind of corrections can lead to further follow through moves. So IT, I would clearly say stay away if you're a long only trader. Long only investor is a different story. As per our state of flow, momentum readings, red, stay red. We generally club digital with IT because there are some overlapping names there, and digital also tells us the same stories. Are there any signs of bottoming out which catches my attention? No, not on IT, not on digital. Next, red, let's start from the top, FMCG. CNX FMCG, bouncing back. It was negative last week. This week, it has bounced back. It has gone a neutral state of flow. Okay. It's gone positive state of flow, then the correction with the overall market. This guy also has an opportunity. But I would rather go long on energy and public sector enterprise and auto rather than FMCG because it's a huge underperformer. So you need to give FMCG stocks a little bit of more room. So they cannot be short-term momentum trades. They can be slightly more positional investments and trades. But FMCG, I don't like the close. I'll just finish off by saying that the close last week at the almost at the lowest point of the week's range makes life pretty difficult for FMCG next week. Remember one thing, trigger for FMCG index is going to be last week's high. If last week's high is crossed, then a follow-through move towards these levels are very, very probabilistic. So from a red flag, I'm going neutral. I'll straight away go to consumer durables, wherein the bounce back was exceptional. It has also bounced back. You can see the extent of the bounce back, and you can also appreciate the way it fell. These are not easy charts to trade. So from red, I will go neutral over here also. I'm not going green because it was an underperformer. It is still an underperformer. Then we'll go to media, not my favorite index by far, but it has improved. From red, I have to go neutral because of the neutrality of state of flow and the positive. I see a hook long setup, which is a contrarian setup, and it's playing out good. The chart is telling me there are possibility of upsides. I'm anyways not a big fan of media stocks. Pharma, important sector, choppily down it was, then it bounced back, positive hike in, state of flow neutral. Daily is trying to find some foot, and I think we will go neutral. We lot of red, lot of these negative sectoral charts are now going neutral because of last 2 weeks movement, particularly. Realty had its share of a sharp correction, state of flow neutral, again, same story, very, very similar looking. Most of these sectors are singing the same tune. It came to this zone which I had drawn. I'll keep it drawn, and I'll again go neutral. I'm not going to look out to sell them or sell on a rise, not interested. Chemical, not much of a data. I would not waste much time. Same story, neutral. Consumer durables, neutral. Digital stays red. And the final one is tourism. Again, the same story. The same story are the fact that last week's move led to a bullish hike in, based on a bullish hike in which does not have a lower shadow. You should not be looking out to short them. You should better stay away from them. It's always a very good idea to participate in charts and sectors and stocks which are in a clean state of flow, either on the downside or a clean state of flow which is on the upside. By clean state of flow means bullish hike-ins, very less shadows, which gives you that conviction, right? So it seems like the sectoral rankings and markings, to be precise, kind of changed quite a bit this week. From heavily red flags, it's turned to heavily green. I personally, and within the community also, our only point of concern and our only savior, our only North Star is price. So what is the theme, news, event happening outside? We are aware of it, but we do not give it weightage. If AI is disrupting IT, it shows in the IT price, and it's not showing for the last 2-3 days. It's been showing for much more than that, right? So these green flags can turn to red flags next week, because if price misbehaves, it will change. So with this thought process, it seems like next week we'll be starting off with a little bit of hope that the market and few sectors, especially the banks and the private banks, can support the market and turn around. If that happens, if the market behavior and our narrative matches, that's very good. We will get some good trades. Or else the market can slip, market can fall, and all the greens can go to neutral. We'll take it up 1 week at a time, just the way we do every Saturday. And this is where I will end my market and sectoral analysis for you. Trade well next week.